You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around these parts, the option block. A little bit of options, wit, some wisdom, some analysis, hopefully a sprinkling of entertainment and education. Mix it all together with the heady brew of picking into the future, some unusual activity, all that fun stuff, a whole bunch of your questions. And you got the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you like this, you like the other 14 programs on the network, too. Easiest place to find them all, of course, mothership, the flagship, theoptionsinsider.com, or head on over to your favorite podcast provider, your iTunes, your TuneIn, your Stitchers. You can subscribe to this show, Option Block. We won't hold it against you. If you want to get the full kit and caboodle, our daily news, our show for financial advisors, you're into volatility, we got a show for you there, futures, options, etc., so on and so forth. We got you covered, 15 of them. Head on over, subscribe to the network, then you'll be covered all day, every day, pretty much, except for the weekends, with more options content you could probably handle. So check that out if you are brave enough to handle the full fire hose of our content. Of course, you can always grab our mobile app, iOS, Android, and all that other fun stuff. Easy for me to say today. You can also join us live, of course, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. For all of you hardy folks among you, we are streaming this and recording it live on Thursday, July 13th, for all of you playing the home game. And I'm pleased to be joined here in the studio. You know, very rare we get you in the studio, but he's here in person. I can claim to it myself. Good old Uncle Mike Tussaw, you actually left the safe and paradise confines of St. Charles, and you're joining me here downtown. Welcome to the studio, sir. What brings you here?
Well, you know, I don't like to do that too often, but there are a few things that it is worth leaving the sunny, scenic paradise of St. Charles, and coming and being here in the option block, that's definitely one thing. And plus, RCM made me come in for a meeting today.
Ah, there's the truth. There you go. So you're buttering us up a little bit, but the reality is you got called in by the honchos. I understand, but I'm happy you can make it here nonetheless. You're certainly going to clean out my fridge a lot less than the meatball when he's in here, so that'll save me at least on the fridge restocking bills, if for nothing else. And also joining me a little bit farther away from the studio. I'll have to get him in here someday. He was actually in town a few weeks ago, Uncle Mike. He could have joined us here, but both of us were out, so we couldn't meet him.
We knew he was coming to town.
Exactly. We heard he was coming to town, so we said we're getting the heck out of Dodge. But now he's joining us via the magic of Skype. I almost called him Meatball, Mr. Rock Lobster. Andrew Giovinazzi from OptionPit.com. Do you take offense, sir, that both of us kind of skedaddled when you came to town?
I was about to say that is almost pre-show umbrage, like right off the bat, pre-show umbrage. I can't believe it.
It's current show umbrage.
Yeah, it's existing show umbrage now. It's not pre-show umbrage, but we'll take it. The show is underway. So before we get more umbrage rolling, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we break down what's rocking, what's rolling, what's catching our eye in today's market activity. A little bit of a quiet one to end the session here, with most of the major indices up about 0.25 percentage point or so. Tech-heavy NASDAQ up slightly more, S&P and Dow up slightly less, but all pretty much in that range, and all that kind of nothing on the screen means VIX cash exhaling. We know it doesn't take much for people to line up out there and start smacking bids in VIX, and that's exactly what we saw yet again. Now closing off about a third of a handle, shy of the 10 handle yet again, so back into single-digit land. So that's looking good for my prediction here for vol views for tomorrow. We got another day, so we all know anything could happen in 24 hours, but not looking good for all the VIX bulls out there. Got a low of 992, closed right off that 995, so not looking good out there in volatility land. And Uncle Mike, I usually let you relax a little bit, but you're here in studio, so I got to toss to you first, sir, for your epic 35-minute breakdown of all things that were catching your eye today, sir. What was lighting you up in between your myriad meetings here in downtown Chicago? I know the big city must have shocked and awed you.
Got to be honest, it kind of did, actually. But no, a few things that are going on right in the market today. First thing that comes to mind, it is a little bit of a quiet day, but I was noticing the biotechs shortly after the Republicans announced, put their healthcare bill on the table. It looks like biotechs are taking off a little bit. Now, whether that's good or bad or whatever, I haven't had a chance to fully analyze the healthcare bill as of yet. But I do think that's one thing that IBB is what I'm looking at. That's one to where if you look at shortly after 1 o'clock today, around the time the bill was announced, we did have a little bit of an uptick in that. So I think that with the biotech companies, the theory is that there's going to be less regulation under the Trump healthcare plan. However, he has said in the past that he thinks there needs to be more regulation, but apparently the perception is right now there will be less regulation with it. So that was one thing that was catching my eye today. Silver continues to get beaten up. I'll just say, thank God I have put options on it for right now. And it's times like this where this is why you hedge. This is why you're prepared for things that are when things are going against you.
You might be rolling that collar down soon, sir. You might actually have to do something out there.
Well, I did do something on my more tighter collar. I had an 1820.
That's true. You did something once. That's true.
Well, no, actually last week I did. I rolled down my 18 put down to a 16 half put for pretty much there was no difference in the time value in it, so I did the roll down. It was kind of one of those no-brainer rolls, and so I did that.
A free roll is always nice.
Yeah, I had to give up a month or two of expiration on it, but that was fine for as far deep in the money as it's gone. So with that, I was happy with that. In terms of the one with the 12 put for 2 years out, still not going to do anything with that at this point, but we might be looking into some 1x2s or something along those lines. Should silver continue to stay at these levels. The other thing that I noticed on the day-to-day was that financials are still very quietly near the highs. SPY right now, we're at 244.42. 245 is the all-time high. I was really hoping that I could say my trademark saying actually in the studio today, Mark, but I can't.
Missed it by that much.
I know, it was tough, but we are also very close in the financials. Financials have been doing very well recently. XLF is above the 25 handle again. And so a lot of things going on today, even though it did appear to be a relatively quiet day on the surface.
See, adjusting your silver collar, getting some other action going off. A busy day for you, sir. In between your meetings, you can find some stuff when you're out there looking. Which I'm looking forward to hearing maybe on your next strat, maybe even today. We'll hear your in-depth plan for rolling and adjusting your epic 2-year silver collar out there.
For sure.
I know many others out there are also eagerly awaiting with bated breath, sir, such updates on the silver. Let's move across the country now, all the way out to the shores of Maine, where in addition to bemoaning the cost of the cost of lobster, silver perhaps as well, but mostly lobster. What'd you say? It was up to $6 or $7 a pound, even in your environs. The Kuwait of lobster must be crazy. Time for some lobster puts out there, sir.
The Kuwait of lobster. That is.
I've said that before on the show, have I not? You're like your own little empire.
I've
Kuwait,
heard that one
Kuwait
before.
gas is like a nickel a gallon because it's everywhere. Same thing with Maine. It's lobsters. They just jump into your boat as you're walking by.
I will say there are many lobster pots out there, but if you touch the wrong one, you might get your hand broken. But it is. Lobster is expensive this year. I think the lobster fishermen are doing well. However, what is the market doing? I think, and there's a closet theory of mine, I guess, at the beginning of the week was it's kind of weird because the big bank earnings, some of the big bank earnings are tomorrow morning. And I think the market has been rallying up on the the prospect of better earnings. The rates are a little higher. It seems like the conditions for banks, it's kind of bullish. There's not really any insane volatility, which I guess means that the banks can just lean all over their clients or do whatever they do to make money. Not that I would ever know anything about that, but it seems like there is the market wants those to go higher, and we're looking at some levels. I'm just looking at let's say like Bank of America or JP Morgan, where they were a little bit higher at the beginning of the week, and they're trying to rally just a little bit more rally here into the close. I don't know if it's going to be a buy the rumor now and then sell the news. I'm thinking that those earnings are going to be okay, and that might be enough to give the banks a little bit more of a kick. But it's been they are still not back to the highs they were of this year, but they're kind of getting there, as Mike said. So I thought that is at least semi-interesting, that the earnings that everybody thought they might start to generate, might start happening. They're certainly looking for them, and we'll see if they get them. That is, I guess, the big question. Now they don't have to pay, $10 billion fines every year for the mortgage-backed security crisis. I think we should see some decent numbers out of them, but again, the stocks are kind of running up there. But I still think we're going to get a little bit of a run out of them. So, as far as volatility goes, I think Yellen put the dagger in volatility, at least short term, kind of mapping out the Fed is we're going to kind of gradually increase rates, and we'll start selling off our securities. We're not going to do anything fast, because I don't think Miss Yellen does anything fast. And that's where we are.
She started her old game again of kind of raising her head up and saying, hey, look at me, we might raise rates again, even though everything in the market is pretty much discounting that all the way out to December and maybe even beyond. This kind of seems like part of their playbook, where they want to just kind of stay relevant for a while. So, hey, we may act again sooner than everyone thinks. And so just to keep they did this about 2 years ago. It's kind of when they started doing this. And back before we got into this single-digit vol, they were kind of single-handedly ejecting a lot of vol into the marketplace. Maybe they're trying to take that playbook again. What do you think?
I think they'd like to try to do that when they would start to speak, but I think at this point, you look at VIX. I mean, the only real reason, besides because we all thought, remember, Trump's going to be no single-digit president for volatility, and I think the biggest beneficiary has been him. He's been the biggest beneficiary because this is kind of back to the every other decade where the Fed says these are what the rates are going to be. They're going to kind of do this for a while, and then you take rates off the table, and that takes a lot of volatility out of the market, especially people that have only been trading for the last 10 years or looking at the market for the last 10 years. They keep thinking, oh, the vol's really low. But, I mean, this is how volatility traded, all through the 90s and all through the 80s and all through the early part of the 2000s after the tech wreck, of course. Most of the time, vol's pretty low because the stock market doesn't do very much, and all of a sudden, it does a bunch. So I think the fact that she might try to get back in, but I think maybe she'll just be happy with the Fed just being something that nobody hears about. I mean, who was the first really famous Fed chairman, I think, was Paul Volcker that I can remember. And that's because he had to whoop inflation. And then after that, Greenspan didn't get famous until he kind of, fixed the stock market crash in '87. So there was a hiatus of about 7 or 8 years between Fed chairmen, and then they kept him on forever into Bernanke-ville. So I'm thinking maybe we go back to quiet Fed chairman, which could be part of it. And I think a last one too is isn't Draghi? He's also saying they're going to start to sort of undo all this stuff they did. I think that's also coming. But anyway, we'll see what happens.
Yeah, it's interesting. I think I saw the most recent numbers I saw were what markets there are for predicting these things have Yellen around a 20% chance of keeping her job under Trump going forward. I don't know if this recent spate of talking has increased or decreased those odds. I'm going to probably guess the latter. And you're right. I think maybe we are, maybe just given some of the backlash we've seen from some of her pronouncements, and not just hers, it's every single Fed chairman and governor has to go out there and share their views on just about every other day. We're seeing a new Fed governor making some remarks that are probably directly contradictory to what she's saying or vice versa. It adds a lot of noise for not a lot of benefit, probably. The Fed should speak with one voice and probably only when it has to at the end of the day. Maybe that's my diehard libertarian leanings, Uncle Mike. Do you agree with that?
Yeah, possibly. I'd be shocked if Trump would want Yellen to stay there, as much as he just blasted her during the campaigns of what a disaster she was, what a terrible job she's doing. I'd be shocked if he kept her around. And in terms of like the other Fed governors talking all the time, I would agree.
Easily said. I like that, sir. Yeah, you're right. We don't get political here on the show. I think everyone, like I said before, longer, more prolonged and protracted contact you have with the markets, I think it just pushes you in a less regulatory type of frame of mind, just because you've seen all the ham-fisted attempts that have come before it, and the Fed is certainly not immune in that scenario as well. Really quick before we keep moving, Mr. Rock Lobster, I know you guys are you got the crazies, the hardcores, the actives over there in the pit chat. What was lighting them up today? Was it the fact of VIX drifting back into single digits, or is that kind of old hat for them? Are they moving on to something else? Are they tearing it up in apron? What was catching their eye today?
We had a lot of clients closing VIX puts. Some of them were holding on to them for a little bit. That was the biggest thing. Just we had we had been looking for the vol futures had picked up a little bit, possibly because what Yellen is saying or what she might not say. And I mean, probably one of the best trades over the last 5 years is, you buy the vol puts kind of before the Fed talks, and then you sell them when the Fed's done. I think that was probably the better trades. Other things in the pit chat that I thought were kind of interesting.
Now, real quick with that. Now, are your people buying the predictably crappy puts on some of the VIX products, or would you actually buy the puts on the VIX itself?
In this case, we're buying the puts on the VIX itself because the predictably crappy products are right now mostly long the August future, and the August future is already pretty cheap. So there's actually was more on this part of the cycle, there was more bang in the VIX puts than there was in actually the vol products in UVXY or VXX. It's sense. Weird. It's just it's an anomaly of the cycle. And so we always try to find the best trade possible. So that was the one.
We also like to try to find some of the best trades or perhaps some of the craziest trades possible as well for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funkiest part of the show, not the Uncle Mike part, that comes a little bit later, but time for the odd block.
Funky.
You're super funky, sir.
I'm going to make it funky.
Oh, you're going to make it funky. I like that. There we go.
James Brown.
Uncle Mike chiming in on the odd block today. I like having you in studio. Get you all fired up. You're going to be on every segment. You're going to be jumping in on this one. When Andrew's doing his plugs at the end, you're going to jump in there too. I love it. It's good stuff. Let's kick things off with the section people love or people love to hate, depending on what you think about this name. I think they call it polarizing is underselling it. We're talking about Tesla. People keep asking us about these quote-unquote catastrophe puts. These are the Jan 2019 50 puts and their baby brother, the even more catastrophic Jan 2018 20 puts. They keep asking us since we kind of uncovered these things 2-3 weeks ago now. Are these things still trading? Yeah, the answer is yes. 145 of these 50 puts hitting the tape today, and even the 20 puts are trading, 20 of those going up on the tape too. So open interest about 28,000 and change, and 10,600 and change on the 20 puts. So there's still there's still juice in these. Still loving these. Uncle Mike, does that make you scratch your head that even these 20 puts, someone today, I'll have to get the prices on these, someone trading 20 of these Jan 2018, 28 of these Jan 2018 20 puts today. I'll get the price for you in a second. But does this kind of stuff, does this make you to scratch your head, sir?
Only in America. This is what the 20 puts just to me look like an obvious one to where someone believes that Tesla's going belly up and trying to take a shot on it going belly up sometime between now and January of 2018. And God bless them for taking on their position.
You know, you see these big OI positions and you think, oh, this is probably something that's from back when the stock first listed and the kind of it's just a legacy position. You don't assume that these things are actively trading hundreds of contracts a day, and yet they continue to do so. So I know you guys love or hate these. Write in with your thoughts. What the hell you think is going on with these things? Because they continue to add OI. If a lot of people have written in saying this is a hedge for some OTC, CDS or swap or something like that. Someone's hedging against default with what they're doing in the OTC CDS market by doing that. I'm with you. I thought that was the case too, but the fact that they're still trickling in a couple hundred a day, that doesn't really jive with, you put on a huge swap position, you're not going to trickle out a couple of hundred a day in some sort of listed hedge or covering of yourself. It is kind of funky town out there. We'll keep an eye on those. Meanwhile, let's move on let's break down. I know, Mr. Rock Lobster, this is kind of the favorite of your room these days. All you crazies out there loving yourself some apron. If you just wait a day, it just keeps getting cheaper, Uncle Mike. This thing down about 25% now from where it went public. It just seems like it went public a month ago. It's only been a week, or about a week and a half or so, I think. Because they listed the options on Monday and went public the week before. So yeah, it's been what a crazy week and a half or so it's been. Trading $7.40 today, off another 2%. So I think off about actually 26% from where it listed, which was $10. Which is not exactly lighting it up. The options, though, have been doing fairly well. It's averaging about 9,000 contracts a day, so not bad for a new name, particularly such a cheap one. Doing about 7,700 contracts today, so a little bit light. If you had to guess, Mr. Rock Lobster, without cheating, without looking at the notes, if you had to guess, without looking at your platform, what is leading the dance out here, puts or calls on the open interest? What's your guess? Easy one.
I just puts.
Yeah, there you go. About 2-1 puts over calls, about 15,000. Puts open about 7,500, exactly 2-1. 7,500 in the calls. That's not surprising, though, despite the fact that puts are kind of dominating. Today it was mostly calls. We saw the biggest trade of the day was 1,080. Someone lifting offers on the AUG 9 calls for 40 cents. So the bulls are not done out here. I have seen these AUG 8 and 9 strikes have been surprisingly active. Yeah, there's 1,300 open on the AUG 8s. We talked about those last show on Monday. About 600 of those. Paper was chasing them from, I think, 35 cents all the way up to 50 cents. Now those things trading about 55. The AUG 9s trading today for 40 cents, and they're still at 40 cents, 30 cents at 40 cents. So these are pretty active. So there are bulls out there loading up on these for whatever reason. The second trade is kind of interesting as well. The second biggest trade is kind of looks like a bit of a linked one. If it's not, it didn't go up marked as spread. I have a hard time seeing that since they were the exact same time code. I have a hard time thinking that they weren't somehow linked. It was paper blasting out the Jan 2015. What were these? These were the 5 puts, I believe. Let me pull these up to make sure. Yes, the 5 puts for 75 cents. Then, kind of like you were talking before, Uncle Mike, you giving up a few months of premium, but doing it for the same price and a little bit higher strike. They also blasted out 1,000 of the October 6 puts, also for 75 cents. Looks like someone wanted to sell puts for 75 cents, and so they picked Jan and they picked OC, and they blasted out 1,000 each of those. What's your take on those, Mr. Rocklab? Do you think those are linked, or is that just someone's got a nice Jones for 75 cents in the premium space, or you think we haven't talked about a time put stupid in a while, let alone an apron?
I think that is a time put stupid.
You did hear stupid, sir. You did hear a time. I knew your ears would perk up. You should have seen him. I wish I had a camera on him. As soon as I said stupid, he was doing something else. Oh, they're calling my name here. Put stupid. Now I'm excited about this here. I want to trade some apron. I like doing this in the studio. I can see his reactions live here. Uncle Mike, was this you here? Are you doing 1,000 lot put stupid in apron?
If I'm doing a stupid, I'm doing way more size than that.
Yeah, that's pretty small for you. I apologize.
50% discount to the IPO price, though, right?
Yeah, I know, 5 handle. If you want yourself some apron and you want to carve out some time between October and January for it, and you can't really decide between those 2 months, but you like that price of 75 cents, then you too can put on a time put stupid selling, of course, to take advantage of these great deals out here. Let us know if you guys are slinging out here. But it has been fascinating to watch this one. It was we don't get a lot of hotly anticipated IPOs these days anymore. So to see these things coming, I like to see what you guys are slinging. And so far, net it's been the calls, the puts, but today at least. Uncle Rock Lobster's excited by this trade now. He's digging into it a little bit. He's like, 50% discount on the underlying, 5% yield. He's going to start trading some of these. You watch. Have I lured you to the dark side, Mr. Rock Lobster?
I'm semi-lured by the 6 puts for 75 cents in October.
Semi-lured.
I'm semi-lured on a yield basis. I have to do a little. It's when I still think it's Webvan, but Webvan bounced to something before it went to zero. So
I got
we'll see. Maybe there's a real I know there's a real business there. I just think it is going to be some insanely competitive business, but.
I got to look up the end. Oh, it went back up in 2001. Yeah, so it is gone. I thought someone would have bought that prestigious license and brought it back, perhaps like Atari. But I guess Webvan wasn't prestigious enough for that type of treatment. But I like that. I think I can see your little gears spinning from here, Mr. Rock Lobster. You're thinking about getting yourself a little time put stupid in apron. Beat him to the punch, listeners, if you are so inclined. You want to get out there before he blasts out 10,000 of these bad boys, and that 75-cent bid is gone. Let's move on to a name that some may say already is gone. It's dipped back into the single digits here. Talking your old friend VIX, Mr. Rock Lobster. This is actually not a today trade. It's actually went up yesterday, but it's worthy of note just for, shall we say, the crazy side. Some may say stupid size out there, even though it wasn't as stupid. It was a size vertical, also for just the duration and the strike, all of the above. It was the AUG 30-35 call spread going up. Yes, paper buying, listeners, doing it for a whopping nickel, doing it 235,800 times. So someone getting themselves a very, very, and they're still open today. I'm looking at about 6,500 of the 30s have traded today, but clearly no unwinding of those positions. So someone either looking for a nice catastrophe spec or perhaps a bit of a catastrophe hedge, even though 30-35, if you want that hedge, those are some odd choices out there. But still interesting stuff. Mr. Rock Lobster, I know this one came across your own personal tape out there. What's your take on someone? You think this is a catastrophe hedge? You think this is a spec? What are you playing on this one?
It feels like somebody has some big short vol position that's sort of mid-priced, and they just need something. Kind of like it's almost like Tesla. You feel like those downside Tesla puts are somebody who was maybe insuring Tesla debt or something, so they're charging so much money to insure Tesla debt that they can buy the 20 or the 50 puts for $1 because it's still relatively cheap for them. This is one where I think somebody, maybe it's a variance swap or some kind of exotic vol product, and they need to buy something. So they're going to buy 250,000 of the 30 puts. It smells like hedging some bigger potential problem. So, and you know as well as anybody, you hedge a big problem by buying more of a junky option. So. Yeah,
I think that technically qualified. He did buy something. I don't know if this would have been my first choice. A $5 spread. If all hell goes against you, what's that $5 spread going to do for you? I mean, it's going to take a little bit off your table. That's sure. That's nice. But by the time you get to 30, I got to feel you're already feeling the heat at that point. So that 5 hand that you can tell your risk manager, but I'm covered for 5 handles. I'm safe. Meanwhile, VIX goes to 80, and you're out of it. Uncle Mike, what is? I know you're not a big VIX guy, but this crazy near-term call vertical. What kind of feel are you getting off this one?
$5. That's what we're going for here. Yeah, maybe someone had an extra 5 cents and they said you got to buy something on it, and that's what they bought. But if that comes through, though, 5 cents for $5, 100 to 1's not a bad deal.
If it's a pure spec, that's looking pretty good.
Yeah.
I'm guessing if that comes to fruition, this guy's not going to be a happy camper. He's not going to say, "Oh, $5, I'm looking good," against the 20-odd handles I may have lost on whatever the hell I got OTC. Probably size short something. This is interesting. These ones are interesting size-wise, duration-wise. He wasn't buying a heck of a lot of time, so his OTC position obviously is not too long-term. And just a weird trades all around. Let us know what you think. Why would someone put this in? About $1.25 million in premium just for a month and change.
Maybe it's a fund manager that knows he's about to get fired if he doesn't get something big soon, and he found 5 pennies that he's able to just do something with. He's like, you know what? If this happens, I can keep my job, but if not, then I'm gone anyway.
I've got $1.25 million sitting around left in this account. Let's completely roll the dice. What should I do? Oh yeah, crazy VIX upside vertical that lasts a month and change. That's a no-brainer winner right there.
And that's probably what he thinks that with the way his fund's performing, that's how much time he has left.
Yeah,
so
that's true. The clock's ticking on everything.
That's how he determined his expiration.
He's going big or quite literally going home, perhaps, in this case. Weird ones out here. A lot of weird stuff out here. It's a good odd block day, I think. A good odd block week coming up. We got another weird one, Mr. Rock Lobster. I know you love yourself. The iShares indexes, all of them across the board. The Taiwan one has come up on our radar a few times before. This is EWT, the iShares MSCI Taiwan Index ETF. Say that 5 times fast, listener. This one closing today, $36.55, pretty much unched on the day. It wasn't any sort of underlying action that attracted our eye today, but it was some size options action. This one's a bit of a funky one too, Mr. Rock Lobster. It's a name that goes up and only does 1,100 contracts a day. So this is not like this is a size monster. Today doing about 39x that, 39,000 and change out there today. 1,698 to 1 puts over calls. Yes, 39,074 puts and 23 calls. So we're going to talk about those 23 calls because they were action-packed. Now we're going to hit the puts, of course. It was out in September if you want to scroll down on your machines, listeners, so you too can play along on the home game. It was a crazy put tree, a spread roll, call it what you will. We first saw this one lighten up. It looked like it had all the earmarks of a tree, a funky tree going up. It was the September 28, 30, 32, 34 put tree, spread roll, call it what you will, going up about 9,527 times, a little bit more, total of 10,000 on the 30s and 34. So they added a few more there. Looks like paper trading a bunch of these for 2 cents on the 28s, a nickel on the 30s, 24 cents on the 34s, and 8 cents on the 32s. It was probably closing, looks like, on the 32s and 28 puts, given the fact that there's about 9,900 open on the 28 puts and about 22,000 open on the 32 puts. 34 and 30 is no open interest to speak of, so clearly opening there. So it'd be weird if this was a pure tree that they were just looking to reestablish on all these strikes. It has the feeling, Mr. Rock Lobster, I'd be curious what you think. It has the feeling of maybe someone looking to reestablish a little bit more relevant put spread here. It looks like they may have been open on the 32-28 put spread, maybe even on a ratio 2-by-1 there, and deciding to close out at least 10,000 of that and reestablish on the 34-30 put spread, a little bit more relevant. And again, if you look at a chart of EWT, it makes a little bit of sense because this name has been in rally-ho mode over the past few months. And so the strikes that might have looked pretty good a little while ago in terms of hedging, not perhaps so good now. He wants to roll up from that 32 to that 34 and maybe protect a size long position. Like we said, looking back over the year that's been out here in EWT, this thing got as low about a year ago, about 28 and change. It's kind of been on an upward trajectory ever since, hitting its highs right around now, actually. 36.5 is pretty much the highs here. So I wouldn't blame someone if they had some long, perhaps looking to adjust. Mr. Rock Lobster, a lot of legs, lots of contracts, 40,000 contracts almost, lots of crazy stuff, lots of OI, some no I. What make you of this crazy put palooza, sir?
So there's doing the OI for a UA for the show. I have seen all kinds of crazy put activity in EWT. And when you look at the open interest, there is no open interest anywhere. And then about every quarter, all of a sudden, these massive put rolls appear. So this is my theory, is that it's, because Taiwan, you have a couple of families that just kind of are super billionaires or whatever. So I just think it's just this billionaire family, and they own a lot of EWT, and this is like their plaything. Like normal people just kind of, I don't know, they have their own little hobby. I think this is just their hobby. They own 1 million shares of EWT, and then they just buy put spreads against it and roll them up. And then if EWT, craps out, they sell out their put spreads and then they do it again. And I think I'm just feeling like this is pocket change. This is a pocket change trade for some billionaire family in Taiwan. That's total spec, but I thought it sounded good, so that's what I'm saying. But these put trades do appear about every quarter, off and on, and there's a little bit of creativity and nuance to them. So I don't think it's a total newbie. It's somebody that kind of knows what they're doing, but that's what I think it is. I think it's the only person that actually that trades this product at all.
Yeah, it is weird.
Like
this thing does nothing, and then bam, 40,000 contracts. This would be a great one to be a market maker in. You just sit there for all quarter, and then you get run over 40,000 times, and you do it again next quarter. That's a fun one. That one's going to leave a mark. But you're right. This has all the hallmarks of someone who's got some size. This looks like someone's got long underlying. You think that they're just hedging, or you think they're outright just crazy specking? There's some crazy specking Taiwanese family account.
Yes, I just think it's somebody that's really long, and they're not going to not be long because they own all kinds of stuff in Taiwan or whatever, so they're always going to be long. But they'll just, they'll buy puts in the rallies and roll them up, and when the market goes crazy, they just blow them out. But, they make, enough to buy at least another 20 Ferraris or a small, office complex or something.
Uncle Mike, what say you to his theory of the crazy Taiwanese family office slinging size every quarter here in EWT?
Well, definitely the theory has a lot of merit, I would think, but obviously it would have to be total spec in terms of how to figure that one out. But, I wouldn't, if I were to just spec this without owning any underlying, because what I agree with Andrew on is that if someone does have this kind of size or is going to trade this kind of size, they probably wouldn't be speccing like this. And they didn't have any underlying, they probably would not be speccing like this on options that are priced in this way. So this definitely looks to me like someone who does have a lot of underlying, and whether or not it comes from Taiwan, we'll let the listeners decide on that.
We'll also let listeners decide if they like your strategy, Uncle Mike, because it's Thursday, it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Like the man said, this is the portion of the show where I get to just leave the studio. Uncle Mike gets to hold court for 40 to 50 odd minutes on whatever's on his mind. Usually it's some options, wit, and or wisdom, but you never really know this guy. He came all the way downtown. I'm sure he's fired up, listeners, with just many, many pearls of wisdom for you guys. Uncle Mike, Thursday, strategy block time. Have at it, sir. The floor, indeed the studio, is yours.
Holy cow, this is great. Now that Longo stepped out of the studio, folks,
I'm gone. Slam.
He left his brokerage account up on his screen, and you know what I see? Stupid after stupid after stupid. So the rumors are true of him being a closet stupid trader. No, I'm just kidding, folks. What I do want to talk about today, I'm actually going to make it a double strategy block for today. 2 for the price of 1. And what I want to go through is, first off, I want to talk about that silver put roll down that I had mentioned a little bit at the beginning of the show. About 6 to 8 months ago, I put on a trade just for the fact that I'm really not a huge fan of bonds right now. I wanted to give something for my clients that is a little bit more conservative, but something that would, in the hopes, have the opportunity to either possibly maybe lose 1%, but could possibly make 6 to 7%, something along those lines over the course of a year. Now, that's usually what your target is in bonds, but, well, let's face it, we don't really have yields anymore. That doesn't exist. So what I did was SLV was trading at 1830 at the time, and I bought a January of 2018 18 put and sold a January of 2018 20 call. And so I did that for roughly a debit of 16 cents and with a risk of 30 cents for the risk between SLV going from 1830 down to 18 or anything below for that matter. Talked about it a couple weeks ago, or actually a couple months ago. We actually bought to cover the short call, sold it again. So we got to the point to where, and I don't have my note, I did not bring my exact notes for me, but I'm going to kind of estimate. We had, what that did was that ultimately turned the collar into roughly maybe a 1 or 2 penny debit. So with that being said, I had the intention of doing stuff, so to speak, on this collar the entire time, which we have. But the other day, what we were able to do is that the 18 put is just so insanely far in the money, which is fine. We were looking to have something to where it was either going to be a a nice gain or a very minimal loss. And if the 18 puts that far in the money, it would be a very minimal loss because of the fact that we hedged so tightly. So what we were able to do on this trade is we actually rolled from the January of 2018 18 put down to the 16 half put for September. Now, by doing that, there was about 10 cents of time decay in each of those options. And I'm actually okay giving up that time decay and giving up the months with which we gave up on the hedge of it, just because of the fact that if silver were to continue to drop, I'm more than happy to get out of it, start over, do something else in it. But here's the benefit of this trade. If you do have a protective put that goes so far in the money, what you have the ability to do is do, in a lot of cases, kind of a no-brainer roll. And in this case, to me, this was a no-brainer because of the fact that we still have the same downside protection, because if SLV goes to 0 or whatever, then we still have that protection. But if it were to go higher, we start making money when it goes into the 16s as opposed to the 18s now. And that's what I feel is really beneficial about doing a roll like this. Now, with anything, there's an advantage and a disadvantage to every trade you do in options, no matter what, even if it is a no-brainer. The disadvantage is that I had to give up a few months of protection on this. If this were closer to the money, if SLV was at like maybe 17 or 17.5, no way on earth I would have done a trade like that. But because of the fact that it's as deep in the money as it is, I'm more than happy to give up that time frame for the potential upside with which we may face, especially on something as volatile as silver that moves rather rapidly. Now, the second thing that I want to talk about is oftentimes what you need to do as a trader, not just for options, but for stocks, futures, whatever, you need to plan ahead, and by planning ahead, you need to do stuff that makes sense to do when other people might not be doing it. I want to revisit a trade that we did a couple months ago and kind of go through the rewards that we're reaping from it, just because of the fact that it actually can do well, and it looks like we have a shot at having it do well. Last December, being the bull that I am, I bought XLF, the financial ETF, and for myself, for groups of clients, and we got in at roughly $22 per share. And some higher, some lower, but let's just say for purpose of example, $22 per share. Now, what I wanted to do on this one is kind of a modified collar, knockout collar, so to speak, in that instead of buying a catastrophe put, wasn't quite going the way of Tesla and buying like the 5 put or anything like that, but instead of just buying a put in general on the collar, I actually bought the 22-20 put spread. I felt that if XLF were to go down that much, I'd be of the frame of mind where I wanted to buy more of it. But I still wanted to have some type of a protection on it because it had gotten a little bit of a bump from the initial Trump rally in November. At the same time, I wanted to finance it, so I financed it. Instead of selling a covered call, I sold the 24-26 call spread, and this was all out for until September of 2017. Now, with that, of course, XLF did pretty well, but what I want to highlight in the strategy block is the decrease in implied volatility. We had a decrease in implied volatility. So the first thing that I did was, and yes, XLF went higher. I bought to close the 20 put on XLF. It was for a minimal amount of cash. It was for, I believe, 17 cents. And I talked about it on the show before. Once again, I don't have my exact notes in front of me right now, but it was around that price. And so by doing that, we have protection all the way down to 0 should something bad happen with XLF all the way out to September. Now, the other thing that I did is something that I think is, if you're a covered call trader, I really think what I'm about to talk about is for you, because if you have the ability to have a drop in implied volatility, this is a way with which you can take advantage of it. Step one, instead of selling a covered call, not saying it's always the right thing to do, but you can sell a call spread against a stock. So that way, if the stock increases in value, you're not capped on your upside. You're still getting some type of an income stream, but if the stock is going to go to the moon, so to speak, you have some upside on it. Now, step two is that let's say the stock starts going higher, which in this case XLF did. Now, what I did with XLF, I sold the 24-26 call spread. Once we were around maybe the 24 level and we had that drop in implied volatility a couple months ago, I bought to close the 26 call, and I sold to close the 26 call, and then I bought to open the 25 call. And what that did is that gave me upside from 25 on up. I was able to do that relatively cheap because of the drop in implied volatility. So by doing that, now that XLF is looking to threaten to go higher above the 25 level, we have upside at a lower level. So what I want to go through today is, the takeaway from today's strategy block is that if you are a covered call trader, number one, consider a call spread. But number two, the way with which you can adjust it is as the stock goes higher and vol becomes lower, you'll still have to pay a debit for it, but you may want to tighten up that call spread as the stock goes higher and volatility goes lower. That's one way. And then another way is if your protective put is pretty far in the money, look for what you would deem as a no-brainer style of roll. And once again, full disclosure, Mark really doesn't have all those stupids in his trading account.
Just about 4 or 5, that's all. Well, I get a double whammy today, Uncle Mike. See, you come in the studio, you get some beverages in you, you're all fired up, willing to dispense the options, wit, and or wisdom. Well done, sir. Still got a few minutes here on the old clock. It means it's time for you guys to join us with your questions, your comments, your insults against the Rock Lobster, all of the above. We welcome them all. It's time to open up the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is indeed the portion of the show where we break down what you guys are talking about, what you guys got on your mind. And we also take the opportunity to sometimes ask you guys a question or two. This week's question was about everyone's favorite name that no one apparently wants to trade. It is, well, actually, these numbers are a little bit different, so we shall see. Last week, everyone said they didn't want to touch APRN calls. Of course, that was a theoretical question. They didn't exist. Of course, this week they were listed, so the theoretical became the practical overnight. And so we asked you, hey, the options are live out there in APRN. The AUG 8 calls were topping the charts when we posted this back on Monday. At the time, APRN was at 8.15, a whopping 75 cents or so higher than where it is right now. But at the time, the AUG 8 calls were 65 cents at 75 cents. And we wanted to know, you guys, what would you do with that market? Would you rather buy that AUG 8 call for 75 cents? Not looking too good right now. Would you rather sell that AUG 8 call for 65 cents? Looking a little bit better. Would you rather buy the APRN stock for 8.15? Also not looking good right now. Or would you rather just say the heck with it and eat APRN's food? Uncle Mike, I know you're looking, but I'll let you guess anyway. What do you think is winning? What would your choice be amongst all these myriad options here, pun intended?
Well, I cheated, so I'm not going to comment on what I think the audience said. And by cheat, I mean actually look at the show notes to be a well-informed host. But I would say that for me, I think I'd rather just eat the food unless I'm doing the one of the things that we had in the odd block today. No, just kidding. I think that I'm just going to eat APRN's food for now.
Yeah, it seems like a safe bet. Mr. Rock Lobster, while we're having fun here in the studio, you can regale us on your thoughts here on all things APRN. Are you going to buy the stock? Are you going to sell the calls, buy the calls? Or are you just going to eat the food?
I'm going to have to say I'm going to eat the food. I don't like selling the calls for 65 cents, and I sure as heck don't like buying it. That straddle is just fair. It kind of bothers me. I'll tell you what. I will take the odd block trade, though. I'll sell the OX 6 puts for 75 cents.
Those bad boys are attracting you. So, do you want to do that time... It's not even a stupid, really. It's just a funky time spread. You want to sell the AUGs and the OXIC puts, like a time strangle stupid?
I could almost, but not quite, buy the August 8 calls for 75 cents and sell those October 6 puts for 75 cents.
Well,
I'm not seeing the quick bounce in APRN. That's why I don't want to buy any calls.
And it's okay because it's a stock that's above $5, so even the Viceroy would approve.
There you go.
Hey, we should put a little stamp on it with that hat. Viceroy approved.
Is $5 is cut off, or is it 10? I want to know, because I thought anything under 10 he'd just.
I thought it was $5.
Well, maybe.
I thought it was $5.
I'll take it. I know he doesn't like the cheapies, but maybe this one is a little bit rich enough for his blood. The actual number is, listeners, a tie so far. A third of you saying just want to eat the food. Can't really blame you. It's been not exactly a banner couple of weeks here for APRN. Another third saying you want to blast out that call, which in hindsight was the trade du jour, even though I'm with you, Mr. Rock Lobster. Kind of hard to just nakedly endorsed blasting out calls. And you can see how these erosion works. These calls, they come in a bit. Even though the stock's off quite a bit, they're still a 55-cent bid, so they haven't come in too much. You would have made a whopping dime for all of your efforts out there so far. Buying the call, obviously not looking too good out there, but still 28% coming in looking at that. So there are some apron bulls out there. 6% saying you'd rather buy the stock for $8.15. And a lot of you have different opinions on this, including Lucy, yes, Lucy, who says, it's not for me. The call options are not for me. I am rich enough to buy the shares. Well, there you go. You got a whole $8.15 or now $7.40 in your pocket. So well done for you, sir. Bally ho. I can see Mr. Rock Lobster's wheels turn. I got a feeling next time we talk to him, he's going to be the proud owner, Uncle Mike, of some short October apron puts. What do you think?
I think that's an exciting trade to come. And should you do that, Andrew, I will yield my strategy block for you that day, just so I want to hear about it.
I'm still getting over the person saying, I don't need options. I don't need no stinking options. I just buy the stock.
I'm rich enough to buy the shares. Yes, you are wealthy, sir. Wealthy beyond belief. $8 and change in your pocket. Good stuff. We get all these names to bring out all the fun folks. Yeah, but I'm looking for, if you do put that straight on, and I want to know if you do the funky time strangle stupid as well, which is pick up the calls. I know you don't. You don't like buying those calls, but it would be fun nonetheless. More love here, Uncle Mike, Rock Lobster, on your put assignments. People apparently, when we got into that spread question of what happens between the strikes, not only did it clearly befuddle you, but it befuddled legions of listeners out there. This one, talked about it a little bit last week. Now we got Darqane, I like the handle, asking a similar question. He says, assigned on short SPX puts. So you short the put, listeners, you get assigned, means getting long the underlying, but how does it work if it's cash settled? Oh, here we get the cash settled thing. This is clearly this is blowing people's minds, Mr. Rock Lobster. I know you were a little confused on it yourself. Now you've worked it out for yourself. Share your findings with the masses, sir.
First off, I take umbrage just on the plain fact that I got confused on the call spread.
Do you remember this, Uncle Mike?
It was a call spread.
When I tossed this question to him on a mail block a few weeks ago, and if there ever could be deer in the headlights on audio, that is exactly what we got. He had nothing, literally, and it wasn't the mute button. It was him. It was literally nothing to say. It was
confusion and delay.
Yes,
I swear it was like this. It was not very good. Anyway, now that so you know what happens with a cash settled option? They take your cash away. So let's say,
to be blunt,
let's say you were short the option at 1,000, and the stock closes or it settles 900, and you're short the 1,000 put. You're going to owe them, $100 times whatever the size of the contract is. So unless you have all that money in your account, your clearing firm is going to find a way to take it out of your hide one way or the other. So what happens is cash settled means they take the money or they give you the money. That's kind of the way it is. And I guarantee you that your clearing firm or your brokerage will make sure you have the shekels in your account to pay for the other side of the trade.
This is the time when there's truth in advertising. There's a lot of terms that don't really make a lot of sense in the options space, front spread. Stupid makes a lot of sense, but some others may not. They're kind of a little bit confusing. Cash settled means exactly what it says. You settled into cash. So all these issues people have with what does that mean? Do I get the underlying? There is no underlying. It's cash. It's cash coming your way. So it's actually the easiest thing to wrap your head around out there, even though it clearly has mystified many of our listeners, including the Rock Lobster. Before we mystify any more of them, let's keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, like the man said, it's time for us to peer into the murky future and tell you what we're watching for the rest of this week into the weekend. We are starting to get off that earnings cliff again, which is kind of nice to have some nice actual, individual names to talk about for a while here instead of all this crazy macro stuff that's been going on. We have some names popping off tomorrow. If you get to the financials, a lot to watch there. We got Citi, JP Morgan, and Wells Fargo popping off tomorrow. We had Delta Airlines today. If you are in the airline sector, of course, more of those coming off next week. Next couple of weeks are when we're going to start seeing the big names coming out. But Uncle Mike, since you're here in person, you came all the way down hundreds of thousands of miles from St. Charles, Illinois. You get pride of place, sir. What's on your radar for the rest of this week into the old weekend?
Hundreds of thousands of miles from lovely, sunny, scenic
It's
St.
amazing
Charles.
how you went around the earth multiple times to get here.
It's like Superman when he went around the earth to go back in time.
He didn't like that strategy block. You're going to rewind time and do it again.
I think that's what we should do. But no, watching the numbers as per usual, watching earnings coming out, and I think the one thing that I'm going to be adding to my list of things to watch, which my list is, well, I watch everything, quite frankly, but I really want to take a look to see in the next couple days how the healthcare bill will affect stocks. I think that today, just showing how it affected IBB and the biotechs, I think that it's going to be the big talk in the news, and so I'll be watching healthcare stocks.
These are the new additions, the latest additions to the strategic night, sir, some healthcare names?
No, I mean there's definitely is some exposure in healthcare, but a lot of the biotechs, there's still a few biotechs that are in the portfolio, but for the most part, just watching them to see if we can get some type of a reaction to it, and just the overall market.
And Mr. Rock Lobster, I know you guys have your hands full over there. What with APRN below $10, so your listeners, your readers, your chatters, your mentees over there just eating it up, and of course single-digit VIX. You guys got your hands full. Big names talking about. What else is catching your eye this week, sir?
The financial earnings, because I think that's going to set the tone for our earnings cycle. Better or worse, I think the market wants decent earnings out of the banks, and we're trading at the multiple of those, so. It's either put up, it wouldn't, I think we get a little bit of a rally and then maybe we kind of, a little buy the rumor, sell the news, and then we pull back maybe, and then in the next week. So earnings for sure. I am feeling that we plumb the depths in VIX tomorrow on decent bank earnings. We could see, I'm going to say we could see a 9.5 print possibly on just happy spasm of good bank earnings. So if we get that, I think we'll put in some low numbers there. And the fact that a healthcare thing could happen when it was dead, being apolitical, whatever, generally Congress passes some crap that makes things more certain. And whether you'd like it or hate it, the market generally rallies into certainty. That's just what it does. It's been doing that since I started putting my foot in the market waters, so I don't see how that will change.
A happy spasm of good bank earnings. I like that. Always good for the technical terms there, sir. We'll be looking forward to our happy spasms. And what happens with the VIX? Unfortunately, that music means we come to the end of this happy spasm of an option block episode. It has been a fun one. We got Uncle Mike in studio. A rare treat to get him out of the paradise on earth that is St. Charles, and I know if you leave the environs for any length of time, they put a tracker on you, so we got to get you back soon. But before the St. Charles authorities come knocking, Uncle Mike, what is cooking in your neck of the woods? And if let's say, just hypothetically, I was interested in trading options without a ticket charge, where should I go? What should I do? Who should I talk to?
Well, I came out of the lovely, sunny, scenic paradise of St. Charles due to the war on ticket charges that we are having right now. No. We do have the ability to trade ticket charge free through several of our brokerage partners. Commissions are greatly reduced in a lot of ways, so restrictions do apply. So if you're interested in such a thing, contact me, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com and learn how you can also be part of this war against the ticket charge.
I like it. Unusually martial tones for you, sir. I like it. The war on ticket charge. I think all of our listeners can get behind that. Whenever they want to sling a 3-lot, a 5-lot, a 1-lot, a 10-lot, having that ticket charge, it's annoying. Call Uncle Mike. Maybe he can help you out. Who knows? Maybe while he's doing it, maybe he'll hook you up with a little bit of time with the Rock Lobster. Or maybe not. Maybe you don't want that. Maybe it's a bonus you don't get.
$100 gift card with $100 gift card with the option pit if you open up an account from this broadcast.
So at his hourly rate, that gives you what, 6 minutes of his time? Is that what it is?
About that. Well, you can get a master. You can get like one of those classes that they have for what's an eighth of a 10-lot or something like that. But Andrew, what can they get for $100?
What can they get, sir?
It gets them an hour special with Tucson. It gets them a month of Option Pit Live. It could get you some stuff. It could get you one of our Saturday classes. It gets you stuff.
All right, head on over to Option Pit and get some stuff for $100. Well, you're very specific of you, sir. If you want, I think you have something coming up about long gamma, do you not? And getting your juice for free?
You know what? After finally listening to you say it for 5 years, we are finally doing a webinar. Mark is doing a mini webinar tonight, a free one. Surf on over to our event page at Option Pit. He's doing a free webinar on just understanding what that gamma stuff is. And then we are doing ways to pay for your juice on Saturday, July 20th. Actually, July 22nd. I got to get the darn date right. Please be the 22nd. It is good. 9:30 to 12:30 Eastern Time. And you will learn how to own gamma and get the market to pay for it. Not exactly like getting Mexico to pay for the wall, more like getting the option market to pay for your gamma. So it is a skill that anybody can learn if they choose to try to learn it.
I like it. Let's get out of here before we get more political. I like that I know your promotional schedule and your webinar schedule better than you do over there, sir. But I've been talking up that getting juice for free for many years now, so I like to think that I have participated in the masterclass. You too, head on over to optionpit.com to learn more. And while you're there, maybe you want to check out, call Uncle Mike to play along with that war on ticket charities. On behalf of Uncle Mike, who's busy fighting a war, and the Rock Lobsters busy figuring out what the heck they are doing over there at Option Pit, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing. And of course, for joining us live. We love you guys too. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.